Very interesting chart here with Mirabela. A few things to really take a look at, and it's been in a long-term downtrend, and it's culminated in this capitulation, so acceleration to the downside. Now this is almost a 40 or 50% drop in the share price in these few days right here, from about 45 cents all the way down to around 20-25 cents here. Now you can see that it occurred on extra high volume, and that is a substantial signal of capitulation. So people have held the stock and they've been wearing it all the way down here, and they've finally got fed up. It might have been a bad news event that triggered it, but at the end of the day, those people have been holding the stock, are fed up holding it, and they've exited the positions in a bit of a panic. And that's the capitulation, and that's step one of a turnaround in the stock. Now step two is this sideways price action you can see here, but more importantly, notice how it occurs on very low volume. And basically what's happened here is the smart money have stood up to the plate at these lower prices and says, yes, we believe this is good value for money buying down here, and we'll take whatever anyone wants to sell us. Now they stand up to the plate here. This is called stopping volume, and here this is absorption volume. So they're just absorbing people, the sellers that have been holding. They didn't capitulate, but here they're having second thoughts. They're getting bored holding the stock. They don't think it's going to turn around, and eventually they just sell it out. Now you can see also that the angle of decline between these two declines here, so you've got this angle right here, and then you've got this angle down here, completely different kind of shape. And that's also a significant contributor to the turning point of a trend. So the power of the selling in here is actually quite weak, and you can see that by the low volume down here. And then what happens, the share price starts to rise, and note that it rises on not a great deal of volume as well. And basically what's happened here is any overhead supply has now been absorbed by the smart money, and when there's no supply, there's only one thing the share price can do, and that's to start moving up. You can see here volume starts to accelerate as we go up here, and this is all the breakout traders, and including us on the growth portfolio. We entered new positions, and this is where the trend starts to gain upside momentum. So from an Elliott wave perspective at the moment, I've counted it two ways at the moment. We've got a wave 1 and a wave 2, and that's the most significant count, and I've put in a smaller degree wave 1 and 2, and I might have just jumped the gun on actually doing that. So these will only be, or this smaller degree count will only be valid if we see some consolidation in this area and an upward breakout. However, if we do break down through wave 1, then this smaller degree count is invalidated, and what we need to be careful of right at this particular juncture is that we don't have, or we haven't been suckered into an ABC correction. So obviously the line in the sand, the most significant line in the sand, is back here at 33.5. If prices fall back below 33.5, then the ongoing bullish argument has been completely invalidated, and really there's no cause to be holding any positions. Chances are that the ongoing weakness will recommence, or we will go back into the range again and not be ready to move higher. So the way it stands at the moment, the only disconcerting piece of information in this chart is today's week close. However, it was a public holiday for most of Australia, so if we can see some consolidation in the next few days, I'm happy to overlook that. But if we do pull back and break down through 33.5, you really don't want to be holding this stock anymore.